We are half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Paul Allen in Sydney.
I'm Haslinda Amin in Singapore. Our top stories today. Asian stocks under pressure after a slide in big tech snaps Wall Street's winning streak. Fed officials, including Chair Powell, giving mixed signals on the outlook for rate cuts. President Trump steps up the rhetoric against Moscow, saying NATO nations should shoot down intruding Russian aircraft while playing up Ukraine's chances of winning the war. Also ahead, chip makers in focus as Micron gives an upbeat forecast helped by AI demand, and Super Typhoon Ragasa threatens widespread damage as it lashes Hong Kong with destructive winds and torrential rain.
All right, let's take a quick look at the market action. We do have stocks open across Japan, Korea, and here in Australia as well. The MSCI Asia Pacific a little bit flatter at the moment. A little bit of softness for the Nikkei as well, coming back after yesterday's public holiday, just off by 0.25% at the moment. We had anticipated we might see a bit of a catch-up for tech stocks, but IT names in the Nikkei are also weaker, off by about 0.5%. The Kospi also a little bit softer. No boost there for defence stocks, certainly not helping lift the Kospi any higher either, because we did hear, as we were discussing in earlier hours, that Ukraine perhaps got a bit of a change in tone there from President Trump at the UN General Assembly, and also speaking about NATO's right to retaliate should there be any Russian incursions into its airspace. But stocks pretty muted around the region so far. Let's take a look at some of the other assets that we track as well. We've got the Aussie dollar looking a little bit softer ahead of inflation data, which we're going to be getting in about 90 minutes' time, or about half an hour's time. In fact, we're expecting to see that tick up, not expecting it to really change the path for Reserve Bank of Australia easing. However, crude oil snapping a 4-day drop on that tougher talk from President Trump. We've also seen a spate of Ukrainian drone attacks on Russian oil infrastructure as well. And of course, the president not happy about European purchases of Russian oil, while hinting at further sanctions against Russia as well. Bloomberg dollar spot index a little bit stronger there also. Now, we are also keeping an eye on China futures as well. Obviously, there's going to be disruption in Hong Kong today due to Typhoon Ragasa, which is why this show's coming to you out of Sydney and Singapore today. But we'll be watching up for the yuan fix later. But the news out of China, Cathie Wood buying Alibaba shares for the first time in about 4 years, $16.3 million worth, purchased by a couple of ARK investment ETFs has.
And Paul, we have news out of New Zealand. It has named a new RBNZ governor in Anna Breman. Of course, Anna Breman becomes the first woman ever to become the RBNZ governor again. New Zealand has named Anna Breman as the new Reserve Bank governor, coming at a time, of course, where the economy needs a boost. We're taking a look at where the Kiwi dollar is trading right now. Pretty flat. In fact, it's just slightly towards the downside, a tenth of 1% versus the USD. Now, we also heard Paul, Fed Chair Powell, who says there's no risk-free path for the central bank amid the dual labor and inflation threats.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. In the labor market, there has been a marked slowdown in both the supply of and the demand for workers, an unusual and challenging development. In this less dynamic and somewhat softer labor market, the downside risks to employment have risen.
Well, let's get to George Boubouras now, Managing Director for Research, Investments and Advisory at K2 Asset Management. George, thanks as always for joining us. I just want to pick up there on your views on what Jay Powell just said, talking about upside risks to inflation, downside risks to jobs. Is he saying stagflation without saying stagflation? Is this something you think about?
Hello, good to be here. Thanks for having me on. Yes, pretty much as we're trying to price future credit conditions, future earnings, and the implications for asset allocation, we very much worry about where the risk premium is. and where to allocate risk going forward. But very quickly, with Chairman Powell, reinforce what we already know, what we got here, and that is valuations are expensive. However, they're there because there's accommodative monetary policy. Obviously, the cut that was well anticipated with 2 more by year end. But at the same time, they've got the balancing item, as you say, is there stagflation without saying stagflation. But the crux of it all is the following. 0.75 is the real neutral Fed funds rate. We believe when you look at inflation premium where it is at the moment, you're going to land at a neutral stance in nominal Fed funds rate around 3.25, and that's about 1 percentage point higher than where we were pre-pandemic because of the inflation premium. That's what we're working on, and the market has rallied year to date, but particularly in the last 3 months in anticipation of rate cuts and notwithstanding inflation risks, but they're not going to get the rate cuts that some are putting in there. But I do think 1 percentage rate cuts over the course of the next year is possible, but we're going for 3 rate cuts of 75. But again, reinforcing, it's a higher neutral Fed funds rate because of the inflation premium, 3.25, and that's exhibited of all central banks around the world, except the ECB, which is very stimulatory at 2%.
So you mentioned a neutral rate of 0.75. You've got 3 rate cuts priced in. What do you see the market's got priced in at the moment? And do you see any risks that perhaps they're overcooking things a bit?
The market's looking for 4 more, but it can tolerate and still be quite a bullish stance because there's money on the side, cash building up, money market funds at record levels, valuations are predictive more at the moment than they were, say, 6 months ago with the uncertainty. But the theme going forward is that it's the language of the Fed funds and the language coming out of the chair and the new chair that's announced next year that's going to be the driver of sentiment. So the 3 rate cuts or 4 rate cuts are pretty much priced in, but the nuance and the sell-off won't be there if they don't get the 4 rate cuts. But if there's a tone of hawkishness to inflation expectations or stubborn core inflation PCE measures, that's when you can get a little bit of a retracement or sell-off in markets on that language. Again, we are here because of Jackson Hole. It recalibrated our attention to rate cuts. September was well flagged. The market wants 3 to 4. And 3 or 4 would be okay. But again, it comes down to any change in language on stubbornness and core PCE can be enough to get some sort of retracement or risk off on equity markets or credit spreads where they're at these cycle lows, very tight credit spreads as well.
So, George, the tailwind from the rate cuts will see the rally through 2025. That seems like a safe bet. The question really is what happens after that? It's going to be a bumpy ride, I would think. How would you position for that?
Yeah, so we'd like a little bit more of a bumpy ride this time next year, and you are right. So we'll get to another 50 basis points by early next year, and then it's going to be a long, elongated, delayed again, interest rate cut cycle in the US. It comes down to the language. And that's where we think will be pockets of volatility amplified a little bit more. We're finishing the second half this year with lower vol, obviously, versus the previous half of this calendar year because of the tariff issues. But we do think that there's opportunity for vol to pop a bit more frequently in calendar 2026. And that's what we'll be looking for. So vol at the moment is getting cheaper, so hedging, and then the option markets, people are going to be buying protection if you can fund it month on month. But we'll be looking at more frequent volatility events as the market comes more accustomed to and disappointed with the rate cut cycle just going to be paused, elongated and low because the discount rate must be higher the cycle ahead versus the previous cycle because the inflation premium is more persistent, and that's the thing. So it comes down to the language of the Fed, and that will create the volatility pockets, and the currency markets will be obviously impacted from that as well.
George, any correlation between rate cuts and market performance? If you take a look at China, for instance, right, it cut about 45 basis points, but its second best performer, Mexico, cut 350. It's the worst.
Yeah, it's about rate cut expectations versus rate cuts in themselves. We're all about pricing future credit conditions, future monetary policy settings that impact that, and obviously the impact on future earnings. Without a doubt, risk assets like lower interest rate expectation changes versus where they were. Let's go back to China very quickly. They're balancing a few issues, and obviously the largest property collapse the world's seen. They're into that fourth, fifth year of trying to get through that balance sheet recession. It will take another few years to fix, and obviously domestic demand cycle is quite weak there. But the export sector is second to none the most efficient in the world, hence the tariff trade-offs. But when it comes to monetary policy in China, the thing to reinforce is the rally year to date, particularly in technology, it's more of a re-rating story. And I think that needs to be reinforced. So our managers have been buying some technology in China that have been very underweight for many years. But that re-rating story about the opportunity on their technology sector as they hedge to the US, it's like the European is, it's rallied a lot and valuations are cheaper than the US, but the re-rating story is more of the driver for equity markets in China. And we also would recommend people play it via the Hang Seng as well. So there is that element to it. But it's all about expectations and changes to expectations as opposed to the monetary policy stimulus coming through, which is important for the underlying economy, of course.
George, would you be looking to add more weight to China in the coming months, or is this a good time to hold some reserves in cash as well?
Hold reserve cash, but certain names in technology in China are still warranted. So again, one of the top 10 positions is Tencent in one of the key global funds, and that's and that hasn't been in China stocks haven't been in the top 10 for many years. So that's just to reinforce that. Again, if you're looking at the index play, still look at the Hang Seng. It's rallied strongly, but that re-rating has got some potential going forward after a bit of a stagger and pause. That's a thing to reinforce. Russell 2000 tilts overweight there 3 months ago. Happy with that, and also Europe looking for more re-rating despite the sickness of corporate Europe. There is a cheaper valuation methodology, and obviously playing that and some convergence is still warranted. Also, what I've just said there, same with credit spreads. Credit spreads are at their cycle lows. They've rallied quite hard, and this could be a good opportunity to exit some of those hard, high-yield, unrated bonds to catch some profit in there and go up the capital structure into the investment-grade fixed income. And my final point for an opportunity, there's a lot of great opportunity valuations in the secondary PE market in North America. There's discounts there to be buying certain books, and that seems to be an opportunity if you want to tie up your money for 7 to 10 years.
7 to 10 years, that's a very long time by current standards. George, thank you so much for those tips. George Boubouras, Managing Director, Research, Investments and Advisory at K2 Asset Management. Now, Super Typhoon Ragasa is lashing Hong Kong. The world's most powerful storm this year will be closest to the city in the next couple of hours, packing maximum sustained winds of 195 kilometers per hour. The highest level hurricane signal number 10 will remain in force for some time amid destructive winds, heavy rain and water levels rising by as much as 2 meters. The China Show co-anchor Yvonne Man is hunkered down in Hong Kong. We're glad for that. She joins us now. Yvonne, we know that there's no stopping typhoon, this typhoon in particular, until it meets land, and that won't happen in the next one day or so. Talk to us about the disruption it's causing right now.
Yeah, I really haven't seen something like this for some time. I think all of us were talking offline about, all of us were awoken around 3 a.m. when it was almost like a flip of a switch, when it went from just eerily calm to just sustained winds of maybe north of 200 kilometers per hour, right? And that basically, this storm signal number 10 is equivalent to a Category 3 hurricane. So certainly we are feeling it right now, still in the thick of it right now. The winds are still howling around my neighborhood. I saw a tree toppled outside as well. There's a bit of flooding as well. And in Hong Kong, we are a very densely populated coastal city, right? So you have sharp terrain, you have torrential downpours, and you also have storm surges that could lead to widespread flooding. So that certainly is the risk here as well. But then again, we've been through storms like this before. We already talked about how it's been a very unusual sort of weather season for us here. Since 1946, we crunched the numbers. We've seen about 19 Typhoon 10s, and including this one here. It's the first time in 6 decades we've actually seen 2 T10s in one calendar year. The last one was just back in July, and that was when we saw a summer of record-breaking rainfall. So it is certainly one to remember here for the record books. And as we mentioned, it's been one of the most costliest and potentially most damaging since Mankut back in 2018.
So Yvonne, tell us, where is Typhoon Ragasa at the moment? Have you had the worst of it yet, and where's it heading next?
I feel like we've seen the worst about, who knows, right? It's a very, very fluid situation, but it is skirting around the southern part of the Chinese coast, right? So we've already seen parts of southern China. When you talk about Macau, they're looking to raise their storm surge alert to the worst, to the highest level as well later on today. They're expected to deal with some record flooding there as well. Where it could go next is probably further west is Vietnam. We've already seen Taiwan. There's been talking about some casualties. I think local media there's talking about, I think about 14 killed and 18 injured in Hualien. So certainly we're still tracking the overall damage. But yes, this is the reason why, we're hearing from Hong Kong officials saying, stay inside, do not go out. There certainly is a dangerous storm. And even for the traders, right? So Hong Kong Exchange is saying that they're going to remain operational, but we've already heard from banks, and they've arranged hotels for the traders or even just working from home here so they can continue working throughout the day.
All right, Bloomberg's Yvonne Man there in Hong Kong, hunkered down. Still to come, President Trump shifts position on Russia, telling NATO nations they should shoot down planes that violate their airspace and telling Ukraine to fight to regain all its territory. And we're counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. This is the China Show.
China and India are the primary funders of the ongoing war by continuing to purchase Russian oil. But inexcusably, even NATO countries have not cut off much Russian energy.
President Trump there speaking at the UN General Assembly and accusing China and India of being the primary funders of Russia's war against Ukraine. Now, Trump also struck a more optimistic tone on Ukraine's chances of winning the war, saying he thinks Kyiv is positioned to fight back and reclaim lost territory. He also said NATO nations should shoot down Russian jets that breach their airspace. His comments come after several incursions that have alarmed Russia's neighbors. Bloomberg senior editor Derek Wallbank is with us. Derek, what stands out is this 180-ton. I mean, his thoughts on Russia quite prominent here.
Yeah, Haslinda, I'm thinking back to that momentous Oval Office meeting between Trump and Zelensky, right? That moment that everything seemed to go completely wrong in their relationship. And then months later, Trump hosts Vladimir Putin in Alaska. He's full of talk that maybe Putin and Zelensky might meet. And now to hear where you get tonally an incredible shift from the American president, where he is really talking about this idea that Ukraine could take back substantially all of the territory that it's lost over the last couple of years. More critically, I think, than just the tone, was the suggestion that Trump made there of that the U.S. will continue sending weapons to NATO nations who are buying them, and that what they do with them is what they do with them, and what they're doing with them is sending them to Ukraine. And so that's the sort of idea there. It's a remarkable shift from this president who has been criticized for being too friendly to Russia on this particular issue. He's also been somebody who has, made the case that his unique ability to step in global points of conflict and be maybe the voice who can solve intractable problems others can't, has been a bit bedeviled by this particular conflict, and there has been some movement among Ukraine's allies to try and suggest that Putin is playing the American president and was trying to bide time and all sorts of things of that nature. And so Trump's missive here could not have been different more from that Oval Office meeting. And as I say, I don't just read this for the tonality. I think the tonality is important, but I read this as a sort of permission structure for Ukraine's coalition of the willing, which has really been trying to layer in the point that Ukraine's security is up to Europe, yes, but is very up to ensuring guarantees from the American president. They certainly would think that they got one there.
Yeah, and Derek, it goes a little further than that as well. President Trump suggesting NATO should be able to shoot down any Russian jets that violate their airspace. Can you tell us a little bit more about that and the potential risk for escalation?
Well, Paul, that's exactly right. Now, it wouldn't necessarily be the first time that has ever happened in the history of ever. Turkey did it at one point, but it certainly would be a change from right now, because so far in the last week or so, the NATO posture has been to mark the overflights, to sort of escort Russian fighters out of airspace, and et cetera, et cetera. But look, you get anywhere close to the idea of Article 5 with NATO, which is that implicit guarantee, attack on one is an attack on all, and you get into some very serious territory. And I think this is part of Trump sitting there saying, this shift in tone. Go ahead and do it. And you've seen some NATO allies, particularly Poland, suggested that if Russia, planes cross their airspace, that is a risk that they're willing to take. Now, certainly that would be a major escalatory stance. And that would have a whole range of implications on the ground in that security theater, as well as in sort of markets and commodities and other things of that nature. So that is a risk that I think people are going to be reading into now.
All right, Bloomberg senior editor Derek Wallbank there. Just get you an alert from Taiwan. Taiwan confirming that 14 people now killed, 124 missing in the wake of Typhoon Ragasa, which is now battering Hong Kong as we speak. So just an illustration there of the severity of this storm. 14 deaths in Taiwan, 124 missing. Let us take a look now at, we'll check you up on markets in a moment. Futures as well for China. We do have more ahead. This is Bloomberg. Okay, we are counting down to the open in Hong Kong and China. Here's a look at the pre-market. A little bit of softness there in Hong Kong, off by 1/3 of 1%. Hong Kong Tech, the Hang Seng Tech Index, off about 1/2 of 1% in the pre-market as well. A lot of traders going to be either working from home or hotels near the office today due to Typhoon Ragasa. It's a very dangerous storm. It's making life very difficult for those people in Hong Kong, has.
That's right. And one stock we're watching in particular is Kuaishou, and that's linked to expectations that China will be unveiling live stream rules for consumer protection. It is in the final stages, according to an official from the State Administration for Market Regulation. It is preparing new rules to protect better the consumer rights, and it will tighten oversight of e-commerce platforms and rein in practices such as deceptive marketing as well as selling fake procedures. While you're watching the China Show, the open is next. Keep it here with us. This is Bloomberg.
Welcome back. You are watching the China Show. We're counting down to the open of markets, about 40 seconds away now. It's going to be business, but not as usual. That's why this show is coming to you out of Sydney and Singapore today. A lot of traders not in the office, setting up in hotels nearby. So there will be trading on the Hang Seng and obviously China as well. But people taking cover from Typhoon Ragasa has caused a lot of people to close out some positions and just sit on the sidelines.
Well, that's right, Paul, and we saw how China is likely to open in the red. Of course, this is one market that's seen outstanding rally. In fact, 5 months of a winning streak, longest winning streak since 2018, outperforming equity benchmarks across emerging markets. But headwinds, of course, building, frothy valuations, shaky economic fundamentals. There you have it. We have China currently down about 0.5% from the get-go. The Shanghai Comp also in negative territory. Flip the page, take a look where we are in terms of Hong Kong. Still trading despite Ragusa pounding the city. The Hang Seng China Enterprise Index, of course, higher by 27%. A lot to do with tech optimism. Alibaba, for example. And sentiment has also been lifted by that progress in U.S.-China trade talks. In terms of China 8 shares currently down by 0.3%. Property index down by 0.1%. HS Tech as well, which has been a stunner, currently lower by 0.6%. Couple of stocks we're watching, by the way, Paul. Kingsoft Cloud, among them, it's agreed to issue 338 million shares at 829 Hong Kong apiece in placement. That represents, by the way, a discount of 7.5% of the ordinary shares enlarged by the issue. The plan really is to use 80% of the proceeds to support its AI business, like infrastructure, like cloud services as well. We're also keeping an eye on China gold stocks. Not surprising, because we've seen how gold has been on a tear at a new record high. China wants to become a custodian of foreign sovereign gold reserves. And according to people familiar with the matter, it wants to boost its standing in the global bullion market. You know, it's a pretty interesting move. Remember that China always wants to break away from the U.S. It wants to break away from U.S. leadership. And this possibly is one move that is contributing to that. Gold spot currently down 0.1%, taking a breather from that record high. Paul.
We got some breaking news out of Australia as well. It is CPI numbers for the month of August. That headline number coming in a little bit hotter than expected at 3%. The survey was for 2.9%, and it is an acceleration on the month prior. You're not seeing a lot of reaction in the Aussie dollar there, though. A couple of reasons for that. First off, the RBA is still likely to go ahead with its plans to continue on its easing path. We would have needed to see a huge upside beat to derail that plan. But also the trimmed mean, which is the RBA's preferred inflation gauge, that actually decelerated a little, 2.6% down from the 2.7% that we saw back in July. So the Aussie dollar, not a huge reaction there, even though we saw a beat on headline CPI coming in at 3% for the month of August. Has.
And Paul, we want to take our viewers live to New Zealand, where, of course, we had the breaking news earlier. RBNZ naming its first woman as RBNZ governor. She says that she is fully confident that the RBNZ is independent. Of course, Anna Breman is the woman we're talking about, the new Reserve Bank governor, who will start her 5-year term on December 1st. She is on screen, your screen. She is the first woman ever named to head the RBNZ and the first foreign appointment since Englishman Leslie Lafaux. Now, Brennan was nominated for the role by the Reserve Bank Board following a worldwide search in which 300 potential candidates were identified. She says she is fully confident that the RBNZ is independent. Now, for more on what to watch in China today, our chief markets editor, David Ingles, joins us now. Dave, what's on the agenda?
Hey, guys. Hey, Haz. Hey, Paul. Well, let me just first thank both of you, of course, for helping keep the and holding the fort and help to keep the show, of course, afloat. As you guys were just alluding to there, of course, it's business as usual in very unusual circumstances, of course. Here hunkered down, of course, in central Hong Kong, just being able to just follow really a market that, I mean, the fact that the market is open is extraordinary. It just underscores the, how far the resiliency aspect has come. Now, to answer your point on what we're tracking today, and again, just to underscore, it's business as usual. So a lot of breaking news, in fact, in the last hour or so. So you mentioned Kingsoft Cloud, you mentioned gold stocks are one to watch. So we're looking at live stream and e-commerce. That's really on the back of the statement, which was put out late on Tuesday from regulators, that they're looking to tighten oversight over platforms and make them more accountable and really focus on consumer protection. That's one sector. The other sector is right. I think Kuaishou is also underperforming today. Now, the other sector I've been tracking, well, two other sectors. One other is this one just coming across the terminal right now. This is from CCTV. This is on food platform companies. I don't have the details on this just yet, but they're also looking at perhaps more oversight and regulate food delivery platform services. We know about the competition and the fierce pressure on margins, and you can just take one look at the share price of Meituan in the last year or so, and that really underscores the issues that some investors have over where that potentially is headed. The other thing that just actually dropped, I would say in the last 20 minutes or so, is in solar stocks too, and of course that is also similar price dynamics. Perhaps it has more an anti-involution upstream element to it. But yes, we are getting a lot of regulatory attention, not necessarily a bad thing, of course, to underscore that point. which is why we're tracking this. And of course, you guys have been also talking about what's been happening in Taiwan, the big Micron story overnight. So let me just sneak in one last sector for you guys. That's AI and chips. And of course, Morgan Stanley's note just also this morning underscoring their preference, maybe stating the obvious here, for AI rather than non-AI. They've also come out with some names as far as that's concerned. So that is also a preference on the back of the brokerage. But guys.
David, we're also hearing that Cathie Wood, ARK Invest, making an investment in Alibaba, back for the first time in 4 years. Is she late or is she right on time?
Well, I mean, time will tell. I mean, the other thing I'd point out is, who hasn't thrown their hat in the Alibaba story? I think, it was not too long ago that the share price was trading below 100. We're now trading obviously at 160, and we're not getting more upgrades in terms of price targets. I think what's interesting is because I think it was 2 strategies that Cathie and her team had added that name to. You can track, by the way, her trade. She publishes that on a daily basis after the markets close, and I guess underscores this return. And again, to the point I just made, this re-rating and this mindset shift as it pertains to cloud specifically, right? You talked about Kingsoft Cloud just now, that the market has somewhat done wholesale rethinking of what AI really means, not just for AI companies itself, but old school tech companies looking to use that to bolster their own traditional businesses, traditional, of course, that being tech. So, I mean, only time will tell if it's too late or not. But yeah, if you look at some of the forecasts out there, no, the answer is no, but we'll see.
It's all about timing, Dave. We know that. Bloomberg's chief markets editor, David Ingles, thank you so much for that update. Now, we're watching shares of memory chip-linked stocks this morning as well after Micron reported strong guidance for the current quarter. Let's bring in our Asia Tech correspondent, Annabelle Drewlers, for the details. Belle, I mean, what stood out in the numbers from Micron? It's quite a surprise.
Well, it's just, surprise to the upside, and that's what investors are liking. But they guided for fiscal first quarter revenue to come in at $12.5 billion. The average analyst estimate had been for $11.9 billion, so quite a big gap there that you see. Earnings per share, that also came in better than expected, their predictions for the fiscal first quarter as well. So lots for investors to like. And Micron as a business, I mean, we know it's got that big HBM component. It's a big supply into NVIDIA alongside Samsung, SK Hynix. High bandwidth memory is essential to building out AI infrastructure, and they've been a big beneficiary of that, very lucrative business for them as well. In terms of the share price reaction, it was a little bit interesting to watch because it kind of fluctuated in after-hours trade. But that's also because the stock has had such a stellar run this year. Its share price has nearly doubled. So perhaps a lot of that good news as well has sort of been baked in at this point.
Belle, we've also heard that Taiwan's announced it's going to restrict chip exports to South Africa. What's the reason for this?
Yeah, this is an interesting move, but it's basically a signal of how Taiwan is using its economic clout to try and put pressure on countries that continue to grow their ties to Beijing. So, as you said, that there are going to be these restrictions. So moving forward, basically, all exports of chips to South Africa from Taiwan will require rather pre-approval. In terms of why this is happening, essentially, South Africa and Taiwan haven't had any diplomatic ties since 1997, but Taiwan has kept a representative office in the capital, Pretoria, and South Africa wants them to move that office to Johannesburg, and it sort of follows a bit of a pressure campaign because it really started in 2023 when South Africa hosted the BRICS summit where Chinese President Xi Jinping was attending, but he's coming back again for the G20 summit in November, also in South Africa of this year. And so it seems like Pretoria, South Africa, really wants this office shifted in time. But again, it's the reaction from Taiwan and maybe also that growing discontent that you see from Taiwan of how China is essentially trying to distance countries around the world from the armament.
And Belle, in other developments, reports suggesting NVIDIA, OpenAI looking at a new business model for their data center partnership. It could be quite novel.
Yeah, this is a really interesting report from The Information. But at a headline level, the big story this week, and one of the reasons we've continued to see tech stocks gaining so much, is because there was a lot of optimism with NVIDIA possibly putting in up to $100 billion into OpenAI to build out its data center infrastructure. Now, OpenAI would work with a company like Oracle. They'd be purchasing NVIDIA chips to make this happen. But what the information is saying is that maybe instead of buying the chips, OpenAI could look to lease them from NVIDIA instead. And the idea of leasing for a company like OpenAI, it could bring down their procurement costs by up to 15%. That's what the information says, according to their sources. We don't really have any details on how they've derived those calculations or reached that calculation. But for a company like NVIDIA, taking this model as well is an interesting one, given it could help it expand its customer base beyond the hyperscalers like Microsoft or Alphabet, and also give customers comfort that if they're leasing their technology, there's not that sort of concern that if you buy a chip, it could become obsolete if NVIDIA puts out a replacement chip just a few months later. So something that's still, of course, very, very early stage. It's not our reporting as well. It's from the information, as I said. But nonetheless, as you said, a very interesting and novel concept, possibly.
All right, Bloomberg's Annabelle Drool is there. Still to come, we are speaking with Bain and Company about why AI revenues may fall short of the sector's trillions of dollars in funding needs. That's coming up in the next hour. This is Bloomberg. We're looking at shares in developer Czen, which has raised $160 million in US notes. It's the latest company from Greater China to tap debt markets, pushing total sales this year to the highest since 2022. CK Hutchison, China Ping An Insurance, and several local government financing vehicles priced dollar bonds this week. And big names like Alibaba, Tencent and Baidu have also raised cash this month through yuan-denominated offshore bonds, taking advantage of low funding costs. Macau casino operator SJM and delivery giant Meituan are also reportedly planning to do the same.
Well, Paul, for more on the debt market outlook for APAC, let's bring in Rishi Jalan, MD and head of APAC Debt Syndicate at Citi. Good to have you with us. Paul has just talked about the strong momentum for issuances. You can imagine that it is going to be sustainable at least through the rest of the year.
Absolutely, Linda. And Paul, thanks again for having me back over here. Look, a lot of what we've seen this year has been driven by CapEx, by M&A, and by refinancings. I'd say refinancings has probably been the most, given a lot of the issuance that took place during the COVID years were at zero interest rate cycles, right? So you had a lot of volume that was issued back in 2020, 2022 that is maturing now. So that's coming up for refi. But there's also been a fair amount of M&A. And if you look at what we've done in Japan with NTT, we've raised over $15 billion for them across dollars and euros. It remains to be the largest dollar deal in APAC in our history. So a lot of activity going on, and I think we're pretty happy with the way it's being consumed by investors.
It is for real this time around, isn't it? Because all the factors are pretty much in line, including an easing cycle from the Fed.
It is, yes. And I think all the stars are aligned. It's not often you have both issuers and investors happy and smiles on their faces. So we're getting great pricing for our issuers, but they're also performing in the secondary market. So investors are pretty happy with the way those are going. Yeah.
In terms of Fed policy going forward, though, I mean, Jay Powell called that last cut a risk management cut. Is there a chance that the path of easing might take pace a little bit slower than markets are expecting?
Yeah, Paul, it's possible. And I think what our guys are looking for on the investor and issuer community is really seeing that momentum stick, right? So we want to ensure that the rate cycle is affecting our issuers and investors in a positive way. And I think if there's an expectation for rates to come lower, you will see more and more issuers come out to the dollar bond market. We talked a little bit last time about local currency, and a lot of the dollar issuers who've issued in USD have been lost to the local currency markets, given cheaper financing. But I think as the Fed starts coming a bit lower, it's that game's going to change, right? Because you're going to have more compelling financing terms in dollars as opposed to some of the local currencies.
So you're seeing any changes in demand for dim sum and panda bonds as well?
Yeah. So I think across local currencies, the dim sum and AUD have probably been our two biggest winners this year in APAC. In dim sum and panda, I would say the arbitrage in pricing has come down a fair bit. So it's pretty price efficient for issuers to issue in dim sum now. There's also an ease of issuing, given they can issue off the MTN programs, the shelf filings, or they can issue off, essentially better terms, better use of proceeds. There's no restriction in moving the money around, etc. Right? So you've seen a lot of issuers go to the dim sum bond market. It hasn't only been Chinese issuers. So you've seen the likes of Chubb Insurance from the US, you've seen DBS, and the likes Temasek from Singapore all issue in CNH this year.
So dim sum bonds basically booming somewhat. I mean, we have big tech companies wanting to tap, cheap financing. I'm just wondering, should there be any concerns at all?
No, I don't think the geopolitical concerns have necessarily driven the need to issue in CNH. I think it's purely just an arbitration in pricing the lower absolute yields that issuers are able to achieve in CNH versus dollars and other currencies. But again, as dollar rates come lower, I think that arbitrage could very well reverse back into the G3 and US dollar spectrum.
I also want to talk about private credit. There's been a lot of interest and a lot of momentum.
Yeah.
It does seem like it's becoming so crowded that perhaps it should be holding back.
Yeah, it's interesting, Haslinda, and I think with private credit, the key driver for that has really been the ability to attract higher yielding credit. And every week in Asia, we have new investors coming up, setting up shops in Asia for private credit. But there aren't as many deals going around. I think the hot pockets continue to be Australia and India. In Australia, you're seeing a lot of sponsor-backed refinancing. In India, more sort of institutional placements. But guess what? The high yield and the leveraged loan market has been extremely active this year. And, issuers are able to achieve that pricing very competitively in public markets. So there isn't necessarily a need to go into the private markets. That said, I think there's still a huge scope, and we're very focused at it from Citi's.
Is there a sense that it's being used as a hedge against stocks and a hedge against, a slowing PE market? Is that the sense you're getting? What are you seeing?
Yeah, partly you could say that, but a lot of the financing in India, for example, has been against shares, right, against equity, public equity, private equity holdings. So there is a little bit of that's going on. But once again, I think we haven't really seen a wave of defaults that have taken place in the private credit market to really assess whether it's as risky as people put it out to be. So I think given that, I would say it's a pretty steady sort of shape right now, and I don't necessarily expect it to blow up by any way.
In the end, though, in this market, it is about valuations, like in the stock market as well.
Yeah.
How much room is there for distortions, and is that what you're anticipating going forward?
Look, I think pricing is one for sure, Haslinda, but there's also bilateral negotiations that take place between issuer and investors in private credit. You have the ability to negotiate very bespoke terms, bespoke tenors, drawdown facilities, which don't have to be a bullet or amortizing like you would in the public bond market. So I think there's a lot more behind the private credit instruments that are being put out there rather than just pricing and arbitrage. Yeah.
And of course, it is an area that the ultra wealthy are pretty much interested in. Is that a fair assumption? Is there a pattern, a trend that's building?
Yep. There's certainly very many family offices, high net worth individuals that are behind private credit funds as LPs. We can see that increasing a fair bit. And why not? Because you're getting a better yield, something in the mid to high teens in dollar returns versus the public bond markets, which might pay you a high single digit at best for a high yield name. So, yeah.
All right, Rishi Jalan, MD and head of APAC Debt Syndicate at Citi. Thanks so much for joining us. Just got some news crossing the Bloomberg terminal at the moment from Zijin Gold. It was going to have an offering. It's postponed the timetable of that offering, however, due to the bad weather currently lashing Hong Kong. Of course, Typhoon Ragasa, the strongest storm since 2018, keeping a lot of people indoors and off the streets today. So Zijin Gold postponing its timetable of offering due to bad weather. We have plenty more ahead. This is Bloomberg. All right, let's take a look at how our markets are tracking. We've got a number of tech and food delivery stocks moving higher at the moment as well. Alibaba's an interesting one, up by more than 1.2%. We did get the news today that Cathy Wood's ARK Investment making its first investments in that stock via ETFs to the tune of about $16 million. First one in 4 years, but Meituan surging more than 2% at the moment. This is after, according to CCTV, China is releasing draft rules to regulate food delivery platforms. It's going to be focusing on their fees, promotions and safety as well. This is citing the State Administration for Market Regulation. So a call there for fair competition among food delivery firms aimed at halting the price wars and forcing subsidies that squeeze merchants' profits. Also introducing load warnings to avoid overbooking during peak times. So some of those names are linked to food delivery performing pretty strongly in Hong Kong at the moment. Now we're looking at Huawei-related stocks as well. This is after Morgan Stanley issued an upgrade to its view on Greater China semiconductor sector. This is too attractive, citing expectations for a value catch-up to US peers. We've certainly seen some evidence of that so far, but look at Tongfu Microelectronics, better by 10% right now. Analysts saying despite macro factors such as tariffs and Taiwan FX impacts as well, their recent Asia field trip suggests AI demand remaining very strong both globally and in China. Coming up in the next hour, Bain is going to join us to discuss shortfalls funding the multi-trillion-dollar cost of powering AI. Let's take a look at Hong Kong, meanwhile, as it's getting battered by Typhoon Ragasa. More in a moment. Welcome back to the China Show, coming to you out of Sydney today for reasons we'll discuss in a moment. Let's take a look at how the Hang Seng's tracking, though, half an hour into the session. The miserable weather in Hong Kong doing nothing to dampen spirits on the market. We've got the Hang Seng turning positive now, better by about 1/3%. And apart from Hong Kong markets, we do, of course, continue to keep an eye on Typhoon Ragasa as it lashes the city with torrential rain and destructive winds. Let's bring in our regular China Show anchors, Yvonne Man, David Ingles, both of who hunkered down in the city. Yvonne, let's start with you. Let's talk about the weather. What's going on out there?
Hold on a second. I have one child behind me here. Let me just move him away for a second. Yes, this is what happens when you have to work from home during the storm. It is very, 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 obviously we're still in the thick of it. We're bracing for full force here right now. As we look ahead to what's really kind of looking at for the rest of the day, right? Obviously, there's going to be disruptions throughout the day. We're still feeling the howling of the winds. There has been torrential downpour. We talk about, trees that basically have been toppled as well. In terms of the trading side of things, I think everyone's hunkered down at home just like us, right? And banks have really set up contingency plans. They've made hotel rooms available for a lot of the bankers out there as well. I hear they're hunkering down at the Mandarin Oriental, the Four Seasons in Central, which has a bit of a coverage there in terms of access to their offices and whatnot. So, but it is a very rare sort of sign that we're seeing a T10 of this size. It's basically equivalent of a Category 3 hurricane. The sustained winds of more than 200 kilometers per hour, and we certainly are feeling it right now. I'm still hearing my gate is basically shaking for the last few hours or so. So we are bracing it now in full force, and that's why you're hearing Hong Kong authorities say, stay inside, do not go out. We've already heard of some deaths in Taiwan when the typhoon hit here over in Hualien, 14 killed, or 18 injured from local media. So it certainly is very dangerous out there right now.
David, in the meantime, never mind the vile weather in Hong Kong. Markets are still trading. What are we seeing so far?
Yeah, I mean, it's just kicked off right now. So there's this fresh round of howling that's been taking place, and I think just an anecdote, of course, and I think a lot of people in Hong Kong might be able to understand and relate to this, right? So I woke up this morning. Well, first I couldn't sleep well because of just how I grew up in typhoons, right? With typhoons around, I've never seen anything like this sound, the magnitude. And well, for one, I couldn't get a good night's sleep just because of how everything just kicked off almost like a light switch around 2 or 3 in the morning. You then wake up and you have this massive headache. And I realized a few hours after that, it was because the buildings were just shaking constantly, right? But again, to the point you just made there, and I think Yvonne also made the point, right? So we're hunkered down here in Central. And I was just walking around the lobby early on, just checking out what was happening outside. There's an actual conference taking place today. You know, there's an actual anti-money laundering conference taking place where I'm staying. A lot of familiar faces in the industry. Actually, I bumped into a few people overnight into this morning. And for those who might be more familiar with sort of Central and the business district, right? A lot of these buildings and malls and hotels are connected. So there's a way to get to places without actually having to step outside for a longer period of time. So a lot of the hotels near the bank. So we had the story out today. The Mandarin Oriental was fully booked out. Last we checked on Tuesday, because from the Mandarin, you can get to a lot of the big banks at HSBC. Where I am right now, of course, this connects directly into the IFC, where you have a lot of the big banks and brokerages, of course. Now, all that being said, it's business as usual, but we're not we're far from being fully staffed when you look at a lot of these banks. And I guess, just to underscore that point, it's business as usual, but things are just getting delayed, right? This massive listing that we've been reporting on the last few days or so, Zijin, right? We understand based on the filing, that's not pushed back by a day. But yeah, it's more or less business as usual, and we're looking at, we'll see. The latest, I'm just looking at the latest forecast here out of the weather authorities. It looks like this Typhoon Signal 10 will remain in place for some time. So there's no indication at what point they will be taking that down. Again, for more context, right? The reason they give, and they're very good at giving forward guidance, just so businesses can plan their days around the weather and what's allowed and what's safe and what's not. So for now, as Yvonne was pointing out, do not go outside, and there's no clear indication of when they are prepared to take that back down. And you just have to listen to what's going on outside just to understand really why they're being extremely cautious at this point in time, Paul. Yvonne.
David, in terms of business as usual, a lot of those narratives that were in place before the typhoon, they're still firmly in place as well. I mean, in terms of sectors that you're watching, we're seeing some interesting action in tech as well. And so some of the big names like Micron are pushing higher. What are you watching?
Yeah, there's a lot of it, right? So, in the lead up to the open today, right? So we had a sort of a very long list already prepared going into the live show at 9 a.m., as you know, right? So things like AI, there's a Morgan Stanley upgrade, there's a massive move from Micron overnight. Defense and oil, right? That was on the back of that reversal in position from the U.S. with President Trump and what he said there, of course, at the UNGA. So we had this long list of stocks. And then after that, you had this flurry of announcements that's come through out of mainland authorities, right? So solar, for one. They're looking at being able to manage the extreme competition in the solar sector. That's point number one. Point number two, you look at Micron, last I checked, trading near session highs. And that's also on the back of authorities looking to tame extreme competition. And we all know what's going on in food delivery, for example. And I forgot to mention as well, right? The statement late on Tuesday around e-commerce and live streaming, for example. So Kuaisha and some of the e-commerce names are also a separate group to watch as well. So it's extremely busy. And of course, Paul, thank you so much. And we appreciate, of course, you holding the fort for us.
Always happy to, David. I want to get back to Yvonne, though, because as David mentioned, you still got that Signal 10 still in place. What is the forecast? How long are you going to be stuck inside? Where's the storm heading to next?
Yeah, for some time, right, they say. So we're not sure, right? It looks like we'll be hunkering down here for some time and probably for the rest of the day. And, what we're hearing is that this is probably the closest that the cyclone is to the city right now. It's going to be skirting to the southern part of China over the next day or so, and then it's going to head more further west to parts like Vietnam. So this could be taking this system a few days to really get through the region. And certainly that's going to be a thing to watch. But we've already seen the impact in southern China, right? We talk about here in Hong Kong, we've seen passenger flights basically in and out of Hong Kong have been canceled for the 36 hours or so. I think up until Thursday of 6 a.m. Macau is also, the airport there in Shenzhen have also remained closed and canceled hundreds of flights out of Shenzhen as well. Macau also looking at maybe possibly talking about a storm surge alert to the highest level because they're expected some pretty record flooding over there as well. So certainly we're still waiting for the potential damage of what this all looks like here. But Bloomberg Intelligence's Stephen Lamb, he's our insurance guy. He's already saying this is pretty close in terms of the cost of all this and the claims that we might foresee here to what we saw just about 7 years ago during Typhoon Ragasa.
All right, Bloomberg's Yvonne Man and David Ingles there, both taking cover in Hong Kong. Still to come, we've got Bain's head of global technology practice joining us to break down the multi-trillion-dollar cost of powering AI. This is Bloomberg. Let's take a look at how some of these benchmarks are doing in China and Hong Kong at the moment. The CSI 300 pretty flat at the moment. The Hang Seng Index in modestly positive territory. We've seen some support for Chinese tech names. Morgan Stanley upgrading China semiconductors to attractive on AI demand as well. Looking at, even though there's factors such as tariffs and foreign exchange impacts, they see AI demand in China remaining very strong globally as well. And we've also heard reports from CCTV that China's releasing draft rules to regulate food delivery platforms, and that's helping support some of those food delivery names as well. So a big game for Meituan also. Take a look at what's going on in Korea. A bit of weakness on the Kospi at the moment. SK Hynix, Samsung Electronics both losing ground. And we are watching shares of memory chip-linked stocks this morning after Micron reported strong guidance for the current quarter. Let's get to our Asia Tech correspondent, Annabelle Drewlers, for more details on this. So, Belle, what stood out in the numbers from Micron?
Yeah, I think what really stood out was the strong guidance, as you said. So the company's saying for the fiscal first quarter, the revenue could come in at $12.5 billion. That's quite a bit ahead of what Wall Street was expecting at $11.9 billion. And also profit per share came in better than expected in terms of the prediction for the fiscal first quarter. So there was a lot to like for investors. And as you said, it really continues to position Micron as being one of the key beneficiaries out of all the spending on AI. One of its most important business divisions or products is HBM, high bandwidth memory. That's very essential to AI infrastructure, and they've been a key supplier to NVIDIA on that as well. But in terms of the market reaction, we have kind of seen it not kind of subdued, I would say, in late trade, but that also points to just the amount of optimism we've seen for Micron this year. Its shares have nearly doubled, so quite a lot has been already priced in at this point.
Well, meanwhile, we've got Taiwan announcing that it's going to be restricting chip exports to South Africa. What's behind this decision?
Yeah, this is a sort of an unusual step, but also a signal perhaps of Taiwan's growing unease with countries that are continuing to build closer ties to Beijing. So what's happened here is that Taiwan last night issued that pretty much all chip exports to South Africa from now on will require pre-approval, but it is a response as well to South Africa's actions against Taipei, because the pair actually haven't had diplomatic relations going back to 1997, but Taiwan has continued to maintain a representative office in the capital, Pretoria. But what South Africa now wants to see is that representative office shifted to Johannesburg, and it has also experienced pressure, I guess, from China as well, because this first started back in 2023 when South Africa hosted the BRICS summit that the Chinese president Xi Jinping attended. And then as well, they're set to host the G20 summit in November of this year. That Xi Jinping is also going to be attending. So there is that sense maybe there's an urgency from South Africa's side because the Chinese president or leader is returning to South Africa. But as I said, it's sort of an unusual step and a symbol of how Taiwan is trying to use its economic clout as well.
All right, Bloomberg's Annabelle Drewlers is there. Well, despite pledges of massive investments, a new report says AI companies could still be falling far short of what's needed. Bain and Company's annual global tech report finds that firms will need $2 trillion annual revenue by 2030 to fund their required compute power. Now, US companies alone would be $800 billion short of that number. Let's bring in Anne Hoecker, Bain's head of global technology practice. Anne, a number of questions raised by that report. I mean, where's this compute power going to come from, and how's it going to be paid for?
Yeah, those are great questions. So if we think of AI, which is, of course, something we're all talking about all of the time, obviously the growth in AI just really requires a lot of compute intensity. So we're seeing these data centers pop up everywhere and at a bigger scale than we've ever seen before. So if we look at models and kind of the size of models you need and the compute power you need to train them, as well as the inference of using these models, and we forecast that out, we're looking at about $500 billion in CapEx in 2030 to fund the computational need for all of the AI use cases. And looking at, translating that into revenue is where you get that $2 trillion number. Now, interestingly, if we think about all the productivity gains that we're seeing, really those early adopting companies get in customer support, sales, marketing, software development, if you take all of that, you close a little bit more than half of that $2 trillion number. So the rest of it really needs to come from innovation, new business models, economic growth. So in order to get the ROI for all of the CapEx that's going to be needed for all the demand for AI, it really is going to need to be both that productivity side as well as the growth in the innovation side for new business models, new companies we haven't even heard of yet.
Are we seeing any evidence of that happening, the new business models, the new funding, and how it's going to promote growth? Or is that just missing in action right now?
Well, I think we are already seeing a lot of innovation, and you see this with a lot of these very well-funded companies that are popping up very quickly and coming up with really disruptive ways, looking at industries in disruptive forms. Everything from obviously a lot of different coding systems, but apps kind of across all different verticals, because AI, I think, really will transform financial services, retail, consumer products. We're really going to see the impact everywhere. So we are seeing some of those disruptive companies coming onto the scenes. They have big valuations now, and they're growing off of a small base, but I think we're going to see them doing great things over the next couple of years.
Yeah, well, we did see a few months ago, to your point, the so-called DeepSeek moment about what can be achieved with much less than was previously thought. Do you anticipate more DeepSeek moments going forward, and where might we see that sort of innovation come from?
Yeah, the DeepSeek moment was quite interesting because it really showed that you can create a model with a lot less than maybe we anticipated. It also really just highlighted all the innovation that's going on in China, kind of across the stack on AI. I do think we'll see more of those moments going forward. If we think of all of the compute needed for AI, all of the power needed to power those data centers, in order to do that, we're really going to need to see innovation in a lot of spaces. So yes, we're going to need to build more power infrastructure. We're also going to see innovation within a data center itself, whether it's cooling technologies, how we're thinking about even what types of chips you're using to drive more efficiency within the data centers. We'll continue to see a lot of innovation in the silicon itself, and we'll see innovations in the models, smaller models, different approaches that allow you to do things in a more efficient way as the models continue to become more powerful.
Well, your report also deals with one very exciting innovation, which is, of course, quantum computing. But it's still very much in the lab at the moment. How far away do you see that technology from being scaled and going to more frequent use in research and development? When do you see its potential being realized?
Yeah, so we've been looking at quantum for a while now, and it always has been a little bit further out. I think we are starting to see some exciting advancements on quantum. A lot of companies are putting good investments there. I think we're probably still, 5+ years out from seeing use cases really ramp up. And when we do, I think it'll be a hybrid environment. So data centers, you'll still have your GPUs and your CPUs. You'll have a lot of special purpose ASICs, and then you'll have quantum. And people will send specific workloads to the area where they are most efficiently processed. So I think we're still several years out from really seeing quantum being kind of part of the mainstream. But the part that's closer in, which companies I think are really starting to think about now, is quantum's impact on cybersecurity. So being kind of quantum safe in your cyber approach is something companies really need to start thinking about now, because I think that impact is kind of more like 3 years out. And to make sure your company is safe, you probably need to start thinking about that approach today.
Well, the AI story is also very closely linked to the geopolitical story as well. Can you tell us a little bit more about how the sovereign AI race between US and China in particular is complicating things for tech companies?
Sure. So sovereign AI is such an important concept, both for companies and countries alike, right? So we see countries kind of across the globe really putting money in to make sure that they have their own data center infrastructure. But the countries that obviously we think about the most are China and the US, as they are both investing quite a bit up and down the stack to really drive their own technology standards and stacks for AI. Now, this really is a continuation of the decoupling that we've been looking at for quite some time now. It really probably started more in some of the comms infrastructure and, importantly, semiconductors, where both the US and China wanted to be less reliant on each other to have a more resilient supply chain for semiconductors, which is so important for all industries in a country. And now AI is just that next evolution of that, where AI is going to be such a big source of competitive advantage for companies. It's going to be so central to how consumers get information. It's going to be important to national security. So these countries are really kind of driving to be the leader in that space, and also to have their standards adopted by other countries. So we really see that with US and China. But then we have to think about other countries as well. So you've got countries like Saudi who are putting big money in, not only to have a local language model in Arabic, but to have that data center capacity where they can really be a global player in this space. And then you have Europe putting a lot of money in as well. Everybody is going to have slightly different data requirements, privacy requirements. So as a company, it really has big implications when you're trying to roll out new features, because you're going to have to think of a country by country rollout strategy. What is allowed? What data can you access? What models can you access? So I do think it's going to add a level of complexity for companies as they're trying to roll out AI innovations, either to their customers or even within their own company.
Now, I know your report also games out scenarios that are top of mind for a lot of people that worry about AI, particularly in terms of either replacing humans or assisting people. Can you talk to us about some of the takeaways around that question?
Yeah, so that's obviously top of mind for everyone around, like, what is AI going to disrupt versus where will it create new jobs? And I do think, AI is going to be quite disruptive across the board. One of the things we look at in the report is, what a lot of times people like to talk about, how will AI disrupt the software sector? Will AI really replace SaaS? And I think there we look at, there are places where I think AI solutions really will be quite revolutionary and change things. There's also places where AI will run hand in hand with some of the solutions we have today and really augment people's abilities to do their work faster, to drive innovation in new ways. So I think the impact is going to be quite widespread. There will be productivity impacts that we're already seeing, and there will also be new innovation that we're already seeing and that we'll see more of. But I think each industry, as we look at those, really does have implications for what type of skill sets are going to be needed, the creativity, the change management, a lot of those pieces, increasingly important to get AI to work. So you need both the technology as well as the creative and innovative part of the human workforce you have today.
All right, Ann Hoecker, Head of Global Technology Practice at Bain & Company. Thanks so much for joining us, breaking down that report on AI for us. And if you're a subscriber and you want to rewatch that interview, you can do so via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages. You can check out those functions at TV Go. Plenty more ahead. This is Bloomberg. Let's get to some global news this morning. Australian Prime Minister Anthony Albanese says he will meet with President Trump next month in Washington. Now, that is months after a planned sit-down on the sidelines of a G7 meeting in Canada was cancelled due to Israel's conflict with Iran. Now, Anthony Albanese had come under political pressure over his failure to secure a face-to-face meeting almost 9 months after Trump's return to the White House. South Korean President Lee Jae-myung says his country is committed to de-escalating tensions with North Korea. In his address to the UN General Assembly, Lee pledged to restore broken inter-Korean trust as he works towards a new era with Pyongyang, one that he says will lead to renewed growth for both sides.
Democratic Korea will begin a new journey toward peaceful coexistence and shared growth on the Korean Peninsula. The first step will be to restore broken inter-Korean trust and shift to a stance of mutual respect.
Right, let's check in on how markets are tracking at the moment. You're looking at Korean defence stocks there, outperforming the broader Kospi, which is right now off by about 1%, but defence stocks having a pretty good day. We had, of course, remarks from President Trump at the United Nations General Assembly, some quite hawkish remarks saying NATO nations should shoot down Russian aircraft that violate their airspace. Also expressed a much more sympathetic tone on Ukraine's chances of winning the war, saying it's positioned to fight back and reclaim the territory taken by Russia. So we're seeing Korean defence stocks rallying on that rhetoric from President Trump. We've got plenty more ahead. This is Bloomberg. All right, 11:29 a.m. in Tokyo. We will have Japanese markets going on a break shortly. We've got JGB traders, meanwhile, sort of hedging sales ahead of the 40-year auction coming up on Thursday. There's been a lot of interest around some of these longer-dated debt auctions in Japan. We've got the yen, meanwhile, not a lot of change there, 147.76. The Nikkei off by about 0.4%. Well, let's get back to one of our top stories this morning. We've heard from President Trump at the UN General Assembly, taking aim at China and India for being the primary backers of Russia's war against Ukraine.
China and India are the primary funders of the ongoing war by continuing to purchase Russian oil. But inexcusably, even NATO countries have not cut off much Russian energy. Well,
President Trump also struck a more optimistic tone on Ukraine's chances of winning the war, saying he thinks Kyiv is positioned to fight back and reclaim lost territory. He also said NATO nations should shoot down Russian jets that breach their airspace. Now, those comments come after several incursions that have alarmed Russia's neighbours. Our news desk editor Balaz Pens joins us now with more on this. Balaz, I want to start first with the President's remarks on Ukraine's hopes going forward in this war, something of a reversal from their first meeting in the White House, which didn't go terribly well.
That's right, Paul. It is a pretty striking contrast since that very memorable White House meeting. And as President Zelensky of Ukraine said, it was a bit of a surprise to hear this from President Trump, although this has been the direction of travel from the U.S. president ever since that summit in Anchorage in Alaska last month, after which it seemed like he hoped that there would be a quick chance for peace talks between Russia and Ukraine, but that hasn't materialized. And in fact, Russia has become even more aggressive in its attacks. We all remember the drone incursion into Poland not too long ago, for example. So it seems like the president is frustrated with President Putin and is expressing that and is going further. And that's certainly something that Ukraine and its European allies probably were very delighted to hear from the U.S. president.
Yeah, and in terms of going further, the suggestion that NATO should be able to shoot down Russian planes that violate airspace, how does that rate in terms of potential escalation?
Well, shooting down a Russian plane certainly would count as escalation. In the Polish precedent I just mentioned, that was the first time a NATO member had to engage with the Russian military assets since the breakout of the full-scale invasion in 2022. So we have been seeing escalatory steps in that direction. I think all of NATO, all of Europe is thinking about how to respond to what seems like an escalating frequency of Russian incursions into their airspace, not just in Poland, but also in places like Estonia and Romania. And to get that sort of guidance from the US president is certainly pushing them in one direction, how they might react if there is indeed another airspace incursion, and how Russia might react to something like that. That remains to be seen, and that's a very difficult question. We also heard Marco Rubio taking a more conciliatory tone, saying that NATO should not shoot down Russian planes unless they are attacking. So there seems to be a bit of a balancing act happening, but it is something that NATO will have to deal with, and NATO countries do have to contemplate right now.
All right, news desk editor Balazs Pens there in Hong Kong. Well, Estonian Prime Minister Kristen Michal says NATO will be ready to respond if Russian forces repeat a violation of its airspace. He spoke to Bloomberg from the Estonian capital, Tallinn.
NATO is a collective organization, and all our allies, not in Estonia or in the case of Estonia, are always backing each other. And this was very visible in NATO Technical Council. It has been visible in direct contacts and press releases coming from different sides. So NATO's members are backing each other up, not only with words, but also with the capabilities, as already mentioned, that different capabilities come from our allies.
And following on to sort of the war in Ukraine, which is obviously the source of much of the issues that you're currently dealing with in your airspace, you said that the aim of the Russians is to draw attention and assistance away from Ukraine by forcing NATO to focus more on their own territories. How do you prevent that from happening and keeping the focus on Ukraine?
It's quite simple. The first thing is to reveal Russia's intent, because the Russia's intent is quite obvious, that all the NATO's members should be concerned with their own borders and territories, not thinking about Ukraine. And the answer is quite simple. Stronger sanctions on Russia's shadow fleet, on energy, on banking, and also assistance to Ukraine. So these will be also part of response, asymmetrical response to Russia's steps.
And the EU says that they are hoping to ban the delivery of Russian LNG into the European Union by the end of next year. Is that too long? Is that too far away? Should they be banning that earlier? And should there be a more active conversation within Europe of banning Russian oil and pipeline gas that is still permitted to go into the European Union?
Quite frankly, to my taste, the sooner the better, because Estonian response has always been that the less fresh cash goes to Russia to wage the war against Ukraine, and also to have this kind of operations or stepping on the borders of NATO. The sooner it happens, the better. So our position is the sooner it happens, the better.
That's Estonian Prime Minister Kristen Michal speaking with Bloomberg's Oliver Crook. Let's take a look at how Alibaba shares are performing at the moment. We've just heard from the CEO, Eddie Wu. He's been speaking at the AliCloud Apsara event, talking about AI, and he says that Alibaba intends to increase its investment in AI infrastructure. Alibaba shares ticking up there by about 3%. And earlier we heard that Cathie Wood's ARK Investment making its first investment in Alibaba in about 4 years to the tune of $16 million. Made through a couple of funds tied to its EDFs. So Alibaba shares there rising in Hong Kong by 3%. We have more ahead. This is Bloomberg. All right, just want to update you on what's been going on in the US around the freedom of speech debate. Jimmy Kimmel, of course, Jimmy Kimmel got his job back on his talk show, but we're getting a response from President Trump posting on Truth Social. There you see it. I can't believe ABC fake news gave Jimmy Kimmel his job back. Something happened between then and now. His audience is gone. His talent was never there. So a fairly standard response from the president. But Jimmy Kimmel will be back on the air. So there's some more putting the network in jeopardy. Some other remarks here. We can't believe ABC. He says, we think we're going to test ABC out on this as well. So suggesting that perhaps the saga not quite over yet. We're going to test ABC out on this and let's see how we do. So that is President Trump responding to Jimmy Kimmel getting his talk show job back again. All right, other news that we had this morning, the Reserve Bank of New Zealand has got a new governor, and it is Anna Breman. She is the first woman to hold the role. She was the first deputy, or still is in fact, the first deputy governor of Sweden's Riksbank. She's going to start her 5-year term at the RBNZ on the 1st of December. Not only is she the first woman in the role, she's the first foreign appointment since way back in 1934. So there you see Anna Breman being introduced as the new governor of the Reserve Bank of New Zealand. She says the central bank going to remain laser focused on low and stable inflation under her leadership. Right, China is said to be courting foreign sovereign gold reserves in a bid to strengthen its standing in the bullion market. For more on this story, let's get to our chief North Asia correspondent, Stephen Ingles. So, Stephen, China aiming to become a custodian of foreign gold reserves. What are they saying, and how's that going to work?
Yeah, well, they're not saying anything yet. We're getting this from good sources telling Bloomberg News that essentially China is in the process of building up this custodianship, if you will, of bullion by courting central banks of so-called friendlier countries to China. So then those countries could buy that bullion and then store it in China. And it is, again, another step in what China is trying to do, and that is, of course, de-emphasize America's outsized position in the financial world globally, and also sort of take some of the business away from the financial centers that deal in gold, like the UK, like Switzerland, like the United States. And again, it's just getting, we've seen the trend, Paul. Essentially, central banks around the world have been buying up gold considerably for their reserves, and the PBOC is no exception. They've purchased for 10 consecutive months, and that's partly due to those rises in prices globally we've seen over the last couple of years, rising to the records past $3,700 an ounce.
Yeah, and excuse me, with this announcement, could we potentially see any impact on gold prices? And is there any hope of China really challenging some of these traditional hubs in terms of their position as traditional storage hubs?
Well, let me take that second part of the question first. Right now, no. But the trend can become something long-term, obviously. The Bank of England is number one with about, 5,000 tons of the world's gold reserves, worth nearly $600 billion US. China has about a little less than half of that, ranking number 5. So they could obviously, and by the trends, move up the rankings. Now, what's interesting as well, the Goldman Sachs put out a note recently, and I'll just look at it here. They predict that gold could hit $5,000 an ounce if just 1% of the privately held treasury holdings switch into gold into their reserves. So that could be a huge boon, obviously, to that gold price. So we're not necessarily seeing that yet, but it's something that China is positioning itself right now. It's been under works for several months, according to the sources, and already they're saying at least one friendly country in Southeast Asia has expressed considerable interest in doing what they are proposing, and that is the custodianship of gold in the Shanghai Gold Exchange.
Even angle there. Let's take a look at other headlines coming out of China this morning. China says it will stop seeking special benefits reserved for developing nations at the World Trade Organization. Premier Li Qiang announced the move in New York, removing a key sticking point with the US. The WTO chief praised Beijing's decision as the result of years of effort. Critics, though, say the step may be largely symbolic and comes years too late. China's cyberspace watchdog has reportedly summoned ByteDance's new news platform to Chair over inappropriate content. State broadcaster CCTV says regulators ordered the site to rectify the problem within a set time limit. Tuchel says in a statement that it has set up a task force to tighten review standards, curb improper content and boost transparency, pledging to maintain a healthy online environment. And we're keeping an eye on Chinese live streaming stocks this morning. Regulators say they're preparing to unveil new rules for e-commerce sites. They say the move will be better aimed at protecting consumer rights and rein in practices such as deceptive marketing and selling fake products. China Hunker is skipping interest on some private debts and pushing creditors to slash rates. The developer is seeking to cut borrowing costs on tens of billions of yuan in debt to about 3%, and that's down from more than 4%. The move highlights Hunker's fragile finances as it faces a wall of onshore maturities despite earlier state support. Tether Holdings is said to be in talks with investors to raise as much as $20 billion. Sources say the El Salvador-based crypto firm is seeking the funds for a roughly 3% stake through a private placement. That could value the issue of the world's largest stable coin at about $500 billion, ranking it among the world's most valuable private companies. Plenty more ahead. This is Bloomberg. So take you back to New York. The UN General Assembly is underway. Earlier we did hear from President Trump, who delivered quite a long and quite a colourful speech, as we've become accustomed to. He had some trouble with the teleprompter as well. That's a different issue, an investigation underway into what exactly happened there. But Trump basically attacked the UN in its own house, and he said countries need stronger borders and traditional energy sources as well to be great, accusing countries that don't have those things of going to hell. And that's a quote. He also said climate change was a hoax, and everyone says I should get the Nobel Peace Prize for his efforts in ending wars as well. So that's what we heard from Trump earlier. He also had some remarks around Ukraine, however, expressing optimism that Ukraine could get back all of the territory that it's lost so far in its war against Russia, and saying that NATO countries should be shooting down any Russian jets that make incursions into their territory. So that is the latest from the United Nations General Assembly in New York. Other news that we're watching this morning: the European Union and Indonesia have secured a trade deal that will eliminate tariffs on most goods. Officials from the two economies signed the deal, known as a Comprehensive Economic Partnership Agreement, and this concludes nearly a decade of talks. The bloc's trade chief says the agreement will save European exporters about $700 million in tariffs. The OECD says the global economy is still on course for a substantial hit from President Trump's trade measures, despite showing greater resilience than expected in recent months. The organisation lowered its 2026 global growth outlook to 2.9% from 3.2% this year. Also sees slower expansions in the US, Euro area and China. The OECD notes that the full impact of higher US tariffs has yet to be felt.
The tariff shock is bringing more inflationary pressures in many countries. So we expect that there will be additional price impacts for firms, not only in the United States, but other parts of the world too. So I do think that the overall picture is one in which you have additional inflationary pressures from tariffs.
Let's get more now on Super Typhoon Ragasa. You're seeing there pictures of Taiwan. Authorities in Taiwan say the storm killed 14 people on Tuesday when it struck the island. The Central Emergency Operations Centre says another 34 people were injured. There's 124 people reported missing. Heavy rain caused a barrier lake in Hualien County to overflow, with torrents of muddy water destroying a bridge and turning roads into churning rivers that carried vehicles away. Now, that storm now, as we've been discussing, is lashing Hong Kong and neighbouring regions of southern China. It could be the most damaging typhoon to hit the financial hub in 7 years. Bloomberg's Danny Lee is in Hong Kong, joins us now. Danny, what's the latest? Is the worst over, or is it still raging outside?
Yeah, the storm got as close as 100 kilometres to the financial hub. and it is moving to the southwest now towards the southwest of Guangdong province. So it's around 140 kilometers away, and it is still packing Category 3 equivalent hurricane force winds of around 200 kilometers an hour. So it has weakened a little bit, but we are still feeling and seeing the full force of the storm. And overnight, the storm arrived with such ferocity. If you're in a tall building like myself or in a residential skyscraper, you could hear the howling winds, buildings swaying from side to side. So that ferocity was keeping a lot of people up at night, like myself. I only had a couple of hours sleep. So it was a pretty difficult night. And so far, the howling winds and the damaging gusts continue, but we have not seen or heard too many reports of damage yet. It's still hard to assess at this early stage, but over the last 24 hours, I expected falling trees and some injuries have been reported. But when you look at the broader impact, Hong Kong still continues to a lesser degree. The markets are still open to lighter liquidity and volume. We have reported that bankers have been working from home, or they are in the offices today, continuing to trade because they are being put up in luxury hotels, and whether that's a benefit or a downside of the Hong Kong exchange, keeping the markets open after changing the rules last year due to try to keep the markets open during storms. So lots of impact around Hong Kong and southern China today.
Can you talk to us a little bit about the impact on transportation and travel as well? What's happening at the airport?
Yeah, for not just Hong Kong airport, but neighbouring Shenzhen, Guangzhou, Macau and Zhuhai, a total of 5,000 flights over today, Wednesday and yesterday and Tuesday have been cancelled. And that's like equivalent to 4 days worth of flights in and out of Heathrow Airport. And that's one of the busiest in the world for international traffic. So there's a huge impact across a wide area. And, it is going to be a challenging one for airlines to recover over the next 24, 48 hours, particularly into the end of the week. It's also a particularly auspicious time because of the ferocity of this storm. Today is Cathay Pacific's birthday. They celebrate their 79th birthday, but not a good one given the impact the storm has had on its own operations, given Hong Kong Airport is closed for 36 hours. But as the storm does move through the airport, Hong Kong and neighbouring airports will start to pick up operations again from early tomorrow morning. But it will be a recovery operation that will take some time to clear.
All right, Danny Lee there in Hong Kong. Thanks for joining us. Well, let's take a look at how markets are tracking at the moment. As Danny mentioned, it is business as usual, although somewhat trying circumstances. But we're seeing big gains for Alibaba. Reason being, we heard from the CEO, Eddie Wu, a short time ago, speaking at the Cloud Apsara event, talking about Alibaba's plans to raise spending on AI above $50 billion. Eddie Wu says the company is looking forward to becoming a full-stack AI service provider. During his address to that conference, he is saying another in total, spending $53 billion on developing AI models and infrastructure over the next 3 years, actively proceeding with a $380 billion investment in AI infrastructure, and the stock now powering ahead by more than 4.3%. We've also seen some big moves for a number of food delivery platforms, including Meituan. They're better by 1.5%. Now, this is on news that we heard from CCTV that China is releasing draft rules to regulate food delivery platforms. It's going to be focusing on their fees, promotions and safety as well. The intention here is to halt price wars and force subsidies that squeeze merchant profits, also introducing load order warnings to avoid overbooking during peak times. So food delivery stocks performing well there. Let's also take a look at China chip and Huawei related stocks as well. Morgan Stanley has upgraded its view on the Greater China semiconductor sector to attractive, saying despite those macro factors like reciprocal tariffs, Taiwan FX impacts as well, their recent Asia field trip suggests AI demand remains very strong, both globally and in China. Well, that is it for the China Show. Insight with Haslinda Amins coming up next. Stay with us. This is Bloomberg.